Hello, good morning and welcome. You've tuned into ET Now and you're watching Buy Now, Sell Now with me, Varun Hiremat, and along with me, Karunya Rao. Let's take a look at the headlines this morning in terms of what the markets are doing, and we are definitely experiencing some profit booking today. We've ebbed off from the high point of the day. We're now trying to climb and get back to those levels. The high point was 14,562, just for your information. Now, there's a clear rotation in the market. There's been sell-on news in IT, despite robust numbers from Wipro and Infosys. Both of them are on the top losers of the Nifty today. Infosys is down 1.7%. Wipro is down 2.7%. That after some stellar results. And it's clearly a theme. HCL Tech is also among the top losers, as is TechM. If you pay attention to a couple of the smaller cap and mid-cap tech stocks as well, and Affle and India Mart, Route Mobile, Intellect Design, they've all ebbed off around 10% from the 52-week highs as well. So clearly, there's some selling pressure going on in IT. Now, another loser today from the Nifty is JSW Steel, clocking a 1.5% fall. On the gaining side, let's see what's trending today. We have UPL, which is making a comeback at 510 rupees, up nearly 4%. IndusInd Bank has been given an extension for warrant conversion. That's up over 3%. L&T is up over 2%. Tata Motors is up over 2%. And Britannia is up over 2%. So some cyclical stocks obviously featuring in the list now. Midcap index is today holding out fairly positive, but the financial services index, the banking index, and the Nifty is definitely under some pressure. Finally, just to get you some more color on which indexes are really leading any kind of up move today, the VIX is a bit high, by the way, just to mention. The media index still staying positive, up 0.4%. PSU banks still staying strong, up 0.8%. Realty also managing to stay in the green. So that's a quick market update. Back to you, Karanya.
Right. Meanwhile, some brokerage views coming in on Wipro as well as Infosys. Macquarie maintains outperform on NIFTY. Says the performance for Q3 has been quite strong. Infosys continues to be their top pick. The guidance has been lifted for FY21, another key positive, and they had deal bookings more than $7 billion. CLSA also maintains a buy. They believe the strong deal wins and optimistic outlook are some key triggers to watch out for. Citi also has a buy rating. They've reported a stellar quarter with growth of 6.6% YOY in CC terms. In fact, Citi has also raised their FY21 to 23 EPS estimates in the range of 1 to 8% and their target multiple to 29x. Goldman Sachs maintains a sell, however, on Wipro. The target they've given is 318. The margins have been above expectations with inline revenues and guidance. EBIT margins, they believe, will have certain headwinds in Q4, and they expect certain headwinds to the margin trajectory going forward beyond Q4 as well. So these are the reactions coming in from global brokerages. Kunal is ready with us. Let's take it across to him then. Kunal, hi, morning. What is the stock on your radar, and under your chart buster category, which stock is it that you'd like to sort of do an analysis on today?
Well, I would look at a couple of names over here in terms of recommendations of stocks, and two buy calls is what I would recommend. At current levels, the first one is a buy on HUL. Now, we can see that there's clear demarcation of the markets. That the Nifty IT index is taking a bit of a backseat, and many of these other stocks as well are seeing a bit of a cool off. But the FMCG stocks are apparently looking quite strong. So I picked up HUL as the first buy, and I'm expecting that the stock will probably come back to hit its fresh previous swing high, which is around 2450 odd level. So buy on HUL with a target of 2450, stop loss at 2355, and the second would be a buy on Indian Bank. Now, I term this as more of a high risk trade because of the the PSU banking pack being high beta in nature. But I for one believe that many of these PSU banking names are looking extremely attractive. Indian Bank particularly, I think almost a month back when the stock had seen this ferocious rally, it had hit that 97, 98 odd levels. From there on, went through at least a 15% correction. So correction, consolidation, both has completed for the stock. So I would expect the stock to also pick up pace from current levels. Targets to be kept at approximately 105, 110 range, and stop loss could be kept at 88.
Okay, thanks for that, Kunal. Hi, Saurabh. Good morning. Market seems to be running out of some steam. What are your calls for today, high risk and low risk?
Bullish on the real estate sector, and the good proxy would be housing finance company. So I would be recommending LIC Housing Finance. It is one of the largest housing finance company in the country. If you look at the business in the September quarter, during the last few months, they have been seen good double-digit kind of a growth in the disbursement. And in fact, the management has guided that maybe by the end of the FY21, they would be closing the balance sheet with double-digit growth compared to last year. There have been the housing finance company has also been able to reduce its cost of funds, and there is a likely that we could see upside in the net interest margin also. So we have set a target of about 530 for LIC Housing Finance Company. Second stock that I would be recommending is the again a low risk idea from the construction space. It is a Ahluwalia contract company. The order books is about more than 8,000 crore, which gives good revenue visibility. The order book comprises of both residential and commercial complexes. They have been doing fairly well in the September quarter earnings, and the business is very much on track. So we have been bullish on Ahluwalia contracts, and the target would be around 330.
Okay, thanks for your picks as well then. But let's move right on and talk about the big voice on our channel today. Former RBI Governor Raghuram Rajan anticipates a strong wave of growth recovery for India by 2022 and says the reforms and focus on fundamentals will help in the process of economic recovery. Here's an excerpt. Listen in.
Well, it's very hard to say, right? I think one has to look around the world, and Bitcoin reached 40,000 after being 10,000, in the beginning of last year. So Bitcoin is the classic bubble, right? It produces no value. It is an asset which can't even be used for payment because it is really difficult. As my friend Austin Goolsbee says, they don't take Bitcoin as payment in the Bitcoin conference because it's just too costly. And yet it hit $40,000. So why are people buying Bitcoin? Because they think it'll go up. Well, that's very bubblish in thinking. Tesla, another case where it's being priced at many multiples of the price of solid car companies like Toyota or General Motors, and you have to have a very firm view of their success and the spread of the vehicles they're making to justify the kinds of prices that are being paid. So it's not as if everything is priced in a way we understand. Now, that doesn't immediately imply that the bust is coming. There are certainly, when people talk about it, reasons to believe that there are underlying supports. The very easy monetary policy, the very low interest rates, the fact that economies are in rebound. I call it a rebound, as Carmen Reinhardt calls it, rather than a recovery, because a recovery means you go back to the place you were. We're still way below the place we were, but we are recovering. We are rebounding quite fast. And especially in manufacturing, that rebound is showing up in good results relative to the previous year. And it's suggestive that nothing really happened to impede growth. The truth is somewhat different. But and of course, there are lots of small investors with plenty of money, sometimes from transfers, sometimes from sitting at home and not spending it.
Slipping into a break here, we have more updates and analysis and stock queries, of course, on the other side. Stay tuned for that.
Hi, welcome back to Buy Now, Sell Now. You're still watching ET Now. Let's bring up the BNSN stock cloud for today. We have some interesting stocks we'd like you to look at. So obviously the first two, while it comes up on your screens, are two IT heavyweights, Infosys and Wipro. Those two stocks are making the cloud today because they've just reported the most tremendous earnings that we've seen in the last 2 years. Still, they're one of the top losers on the NIFTY today. That's sell-on news in IT, which we spoke of earlier. We then have SAIL, which is also retraced from its high point because the government's doing an OFS at quite a discount to some of the recent prices at 64. Currently, I think it's trading at 68. Then we have a couple standalone stocks as well. For example, we have a JK Tyre Index as a subsidiary has posted some very strong numbers for Q3. We have IIFL Wealth because Amansa has sold 10 lakh shares. Never a good thing when Amansa sells. 5 Paisa Capital on results which were fairly decent, although experiencing some sequential drop. We have L&T with Credit Suisse maintaining an outperform, largest order book we've ever seen. FY21 expected inflows are also going to be very strong for L&T. Finally, CESC we have as well, with CLSA maintaining a buy, and the dividend, which was pretty large, has come as a huge surprise, and the business seems to be back to regular growth. And finally, HAL, with the government approving procurement of 73 LCAs. So that's the stock cloud for this morning.
Right, but let's shift gears once again and focus in on the IT space, the heavyweights, that is Infosys, Wipro as well as TCS. All three of them have already handed in their numbers. Standalone, definitely, each of them have been able to really beat the expectations of the street and deliver a robust performance. But if you compare all three of them, Infosys has outperformed TCS and Wipro on revenue growth front. There's positive management commentary by all three, TCS, Infy and Wipro. You have TCS and Infosys guide for double-digit growth in FY22. TCS also aims for double-digit growth beyond FY22 as well. Infosys has revised their FY21 revenue and operating margin guidance upwards. You have strong revenue growth and TCV of deals as well for Infosys. TCS had said after their numbers that both BFSI and North America were at all-time high TCV. TCS and Infy have reported strong growth in America. Wipro has reported a strong growth in Europe. The growth was largely broad-based for them across the verticals. As far as EBIT margins are concerned, they did see a healthy expansion for TCS as well as for Wipro as well. For Wipro, the consumer business, health, technology and manufacturing were the key outliers. Infosys was riding high on BFSI, energy, high-tech and life sciences. For TCS, it was BFSI, manufacturing, life sciences, communication and media. These were essentially the key star-performing verticals for the company, which really drove the performance for the quarter gone by. So there you have it, a good comparison for all three of them done by my colleague Poonam. And the stocks, however, continue to languish in trade, keeping it largely with the overall market mood.
I believe it's time to talk technicals and fundamentals with our guests. Kunal Bothra and Ashish are with us. So let's get on board the viewer queries. The first one, Route Mobile. We have Ashish of Bangalore who's written to us, and he's starting out doing his own technical research. And he said that last week he basically saw that Route was, the chart was looking really good, and it seems to have changed over the last week. So Kunal, this is good because it's a chart-specific query. Has anything changed in the Route chart that you can flag off in the last couple of weeks that would raise concerns? And secondly, what's your long-standing call on this stock?
So I think there's been a marginal change towards the trend on the stock. So I think the period of consolidation has just gotten a bit elongated. So it's not as if that the stock price trends have reversed. The indicators are still strong. The stock is still above its, even though the history is very, very limited, but the stock is still above its 50-day moving average. The major support or the swing support for Route Mobile, I think on the charts is approximately 1,000 levels or 1,010. So it's still at a 10% to 12% higher level as compared to the most immediate strong support. So I would expect that maybe this consolidation could probably get a bit more prolonged for the stock. I would sense that whatever history the stock has shown in the last 2.5 or 3 months approximately, from those 675 levels to almost a 1200, it's now trying to mature into a phase. So from the initial spiky up move, these stocks once they once they mature and consolidate, it takes a bit of time where these stocks go into a consolidation phase and then manages to pick up pace yet again. So I'm sensing that Route Mobile is getting into this consolidation phase. and I believe that this consolidation may probably continue for a couple of weeks more. But I think till the time the stock is above this 1,000 odd level on closing basis, then I believe the stock price trend is still very intact on the positive side.
Okay, Kunal, thanks for helping us understand what's happening on the markets front. If you could quickly tell us or give us a quick comparison between all three Nifty heavyweights and how their charts are panning out, and which is the one that you are betting on most.
Since from the IT space?
Okay, yes.
Well, yeah, from the IT space, in fact, from the large cap IT space, I think that's the specific question. Then I believe TCS could be the other stock which looks attractive. From the three stocks which we generally keep on discussing, TCS, Infosys, and Wipro. I think TCS still looks very attractive to me because Wipro and Infosys, they seem to have gotten into a bit of an overbought kind of a zone. So I think if it's specific towards the large cap IT space, I believe TCS could be the stock to watch out for.
Okay, sure. Saurabh, coming back to you, we didn't get your take on or your verdict on a Route Mobile. What's your sense?
The companies continues to post good set of numbers. In the September quarter, we saw about 150% kind of a growth in the net profits with good double-digit growth coming in the revenue. The company continues to benefit from the pandemic as there is a belief that a cloud communication platform as a service will actually grow, and its acceptance will also grow, and the key beneficiary will be Route Mobile only. While the company continues to post good set of numbers, there are some concerns pertaining to the valuation at which Route Mobile trades, because it seems that the pricing, the valuations does discounts the huge potential that company has. That would be my take.
Thanks for that. We have another Twitter query coming in then. It's from Rajashekhar. He wants to ask if he can buy Pokarna at the current levels. Right now it's perched at 206, and Kunal, the stock has seen a good run up, of course, keeping it with the overall market momentum over the last 3-4 weeks. From 150, it has now reached 205 levels. Is this a good idea to buy a Pokarna right now, or should he wait for the stock to cool off a little bit?
No, I think it's nearing a resistance, of sort, on the daily and the monthly charts. I think there's been a big resistance at this 180 to 200 zone for the stock price, and I think if I'm not wrong, the volumes today are also pretty much high for the stock. So I would sense that that the stock is entering into a bit of a resistance mode, and whenever you see the stock entering into a resistance kind of a mode, you eventually see some bit of correction happening into the stock price. So I would suggest that if you're looking to buy, let the stock at least retrace back towards its 50-day moving average or slightly below that. So maybe at least a 5 to 10% correction from current levels could be a good enough level where you should look to start buying.
Okay, thanks for that, Kunal. Saurabh, what about you? What are your insights on a Pokarna?
A small company, about 700 odd market cap. We don't really have a coverage on this.
Okay, so very simple and straightforward. Too small to really comment on for Saurabh. Let's move on then. Much larger company, so we'll get some insights from both our experts. Cummins and Ajay Bakshi would like to know if it's a good time to enter right now. So let's visit the technicals first. Kunal, in terms of an entry point, do you think it's the right time for Cummins?
Well, it's interesting because I've been tracking this stock very, very closely, at least in the last 1.5 odd month. There have been multiple attempts where the stock had tested the 600 mark. It tested 600, then scaled down to almost 570, 575. There were, I think, 3 or 4 such attempts. where the stock had behaved in this resistance mode. So these are generally whipsaw trades, which happens where the stock or the weaker hands, they tend to get out of the stock, because the stock keeps on continuing to have trading in this range in such a volatile fashion. You believe that the stock would probably continue to remain more volatile. But what happened for Cummins India is, the moment the stock had broken above the 600 mark, 600 or 605 watt mark, you saw a completely strong trend emerging. I think it was start of Jan and end of August, end of December, that you'd seen some strong pickup in price trends for Cummins. Now 600, which was apparently the resistance earlier, is acting as a support. So the stock is at 612, 613 levels, both in terms of risk reward. I think it's an attractive bet where you could look to buy Cummins at current levels. I think 600ish could be a good enough support range for the stock price until the time the stock is above this pivot support. I believe that there could be a stronger possibility that it can not just break its previous swing high, but even go beyond that as well. So I think it's a good attractive price for you to buy Cummins.
All right. Saurabh, your view on Cummins India?
The company is in the manufacturing, trading, and selling of engines. With the good amount of recovery seen in the construction mining segment, we expect the company to post good set of numbers. In fact, in the September quarter also, the company saw domestic recovery of about 80%. There was a good double-digit growth in the exports business also. We expect that Cummins would post good set of number for the December quarter, and there would be improvement in the guidance also. So we are positive on this stock.
Okay, all right. Moving on to next Twitter query. Rishabh Batra has written to us. He actually has two stocks that he'd like our expert views on. Let me highlight the first one. He bought 400 shares of UPL at 637. He wants to hold it for the next 1 year and wants our expert's recommendation and suggestion on that. Kunal, UPL definitely has been a very talked about and a rather volatile stock as well. But if you look at the trajectory in the last 2 months from testing those 400 levels, the stock has seen a good bounce back to cross 510, 512 right now, trading with a gain of 4.5% as well. But the buying price is still quite a distance away, 637. What would be your advice? Is it a good idea to average it? Should he exit or just wait patiently?
No, I think it should probably be a good idea for the viewer to average, because I believe that at some point of time, when you have so much of news flow, it's eventually that the prices will give you an indication first. So if the prices are ready for a breakout, and if they confirm a breakout first, then I believe eventually data flow and the fundamentals, etc., they do play a catch up. Now for UPL, we've seen very strong volume action in last 2 months. So I think December, particularly when there was so much of news flow which was going around to the stock price, the stock had fallen from 500, 510 odd levels to at one point almost at 420 or 425, if I'm not wrong. So I think from that kind of a sharp fall, the stock has managed to absorb that fall and make a fresh swing high for itself. So these are good signs that the prices are becoming more resilient to the news flow. The only catch is that because of the heightened amount of volatility, there could be some knee-jerk reactions which may happen along the way before the stock price settles down. So if the viewer has that kind of an appetite, then I believe averaging out on UPL, especially around that 500 mark or just below that 500 mark, could be a good strategy.
Thanks for that, Kunal. Saurabh, what about you? Fundamentally, apart from the debt, can you now start ignoring all those corporate governance issues with respect to the promoter family trouble in UPL and just focus on the business? Because it's so cheap. Cheapest agrochemical stock, it's so large, and companies like PI now have a comparative valuation. So how do you read into this?
While the business is good, the valuations are on the lower side because of the corporate governance and the management issues only. I mean, there will always be a concern with respect to with respect to bookkeeping and accounts. So, finger crossed. I would not keep my money on UPL.
Okay, plain and simple, too risky for Saurabh. Let's move on to our next query. Rishabh Batra has bought 2,411 shares of Ujjivan Financial Services, not the small finance bank, just to clarify. Kunal, technically, Ujjivan Financial Services, from a one-year standpoint, do you think it's the right time to get in?
So I think the viewers already bought the shares, Varun, and I believe at current levels of 290, 294 on Ujjivan, I think it looks quite okay for the viewer to hold on to the investments. The stock is still going through a grind, so it's not as if that the stock has broken past above its major resistances. But this kind of break will eventually lead towards a potential breakout. Now for Ujjivan, I believe that the stock has hurdles around this 300 to 330 odd mark. So there are a lot many resistances along the way. But if the overall sector does pretty well, like what we've seen the last 3-4 months, a very strong pickup in the financial services name. So I think if that trend continues for Ujjivan as well, then I believe eventually this resistance band of major resistance band of 300 to 330, I think that should get challenged and broken out. So I would suggest that the viewer can hold on to his investments, and I think above that 300 and 330 band is where I believe a much stronger move could probably emerge for the stock price.
Okay, Saurabh, your view on Ujjivan?
The microfinance space does offer a huge growth opportunities for the next few years, and the Ujjivan Financial Services is doing pretty well in that domain. The numbers were good, and in fact they have done provisioning also, good amount of provisioning. So we are positive on Ujjivan.
Okay. We just have time for one really quick query, so request you both to keep it brief. Rajiv Singh Alawat has written to us. He wants our expert's view from Shilpa Medicare from a long-term horizon. Kunal, your view?
I would suggest to avoid. The stock trend is not looking attractive. It's struggling below its 200 moving average as well. So I would suggest an avoid.
Okay, that was brief enough. Saurabh, what about you, Shilpa Medicare?
It is not the best of the company in the pharmaceutical space, and if anyone wants to invest money, I think Alembic Pharmaceutical is the best one to invest.
Okay, on that note, a big thank you to you both for joining us this morning. Great to get perspective from you. We'll slip into a quick break now here, and we'll be back shortly. Stay tuned.
Welcome back. You're still watching Buy Now, Sell Now. On to some stocks that are making the news today. You have SAIL in focus. The government is proposing to offload about 10% stake in the public sector manufacturer. Mubina joins us with more details about this OFS and perhaps tell us why the stock is sulking in trade. Mubina.
After the rally that we have seen in Steel Maker and Major Steel Authority of India, or SAIL, the government now is taking advantage of this by launching an OFS. They have put on the block an offer to sell roughly about 20 odd crore shares that they own in Steel Authority of India at a price point of 64 rupees per share. This is still a little lower compared to the last closing market price, which was at 74 odd rupees per share. Now, if this entire offer for sale is subscribed, it will garner revenues of 1,300 odd crore rupees for Steel Authority of India. Remember that they do have roughly a 75% odd stake in SAIL, and if this entire thing is subscribed, then the stake will reduce to 70%. So it's roughly a 5% stake that SAIL will be putting on the government rather will be putting on the block. Now remember that at this point of time, there is this massive bull run of sorts in metals, in commodities. Steel companies in particular are being looked at very favorably because of the rapid rise in steel prices. SAIL, of course, has the added advantage because it has a good amount of raw material integration. It has its own iron ore mine, so it doesn't have to worry about rising iron ore prices. So that's a big advantage. And clearly the government, which has a very lofty divestment target, is looking at all these factors, perhaps, gauging that investor interest in metals is high, and hence this OFS for 5% stake.
Okay, a lot's been happening in the defense space as well. We have my colleague Avan Dabash now joining in because there's been one of the largest indigenous defense deals of 82 Tejas fighter jets, and defense stocks are in focus. Let's go across to her.
In what's being described by the Defence Minister Rajnath Singh as a game changer for self-reliance in Indian defence manufacturing, India has cleared a deal to manufacture 83 of the home-developed light combat aircraft for the Air Force, and this is going to come in as a big boost to the Atmanirbhar Bharat initiative for defence as well as to the domestic aviation industry, with now hundreds of vendors expected to get orders under the Make in India program. So essentially, the cabinet, chaired by the Prime Minister, approved the largest indigenous defence procurement deal worth nearly 48,000 crore rupees to strengthen the IAF's fleet of the homegrown fighter jet LCA Tejas. In fact, as part of this deal, you've got the procurement of 73 LCA Tejas Mk-1A fighter aircraft, and the 10 LCA Tejas Mk-1 trainer aircraft worth 45,696 crores, and the design and development of infrastructure sanctions worth about 1,202 crore rupees. The deal is going to be a game changer, and it comes as a major boost for Hindustan Aeronautics as well, which had been working on securing these orders for the last 2 years. The next steps is going to be to order the engines, avionics and radars as well. It's the first time that it's the first buy, which means Indian indigenously designed, developed and manufactured category of a combat aircraft. The deal has indigenous content of nearly 50%, which will reach 60% by the end of the program. And the cabinet has also approved the infrastructure development by the IAF under the project, a move that will enable repair or servicing at the base depot to reduce the turnaround time for mission critical systems.
Thanks, Avan, for that. Yesterday on the show, we told you how DLF has surged massively from its March lows and shrugged off all the pandemic blues. And today we caught up with Pushpa Bector. She is the Executive Director of DLF Retail to understand how Q3 has done for the company. Listen in.
Retail is really on a resurgence back. In fact, the quarter 3 has seen, sales coming right back. If I tell you about the categories, I would say that international luxury brands have led the charge. They have done the best. They have almost, in fact, overtaken pre-COVID sales. When it comes to, international premium brands like Zara, H&M, etc., they have almost reached around 80%, 85% of pre-COVID sales. I see a big surge even in the athletic leisure category. They have also, surpassed their pre-COVID sales numbers, as is beauty. So these are the 4 that are really leading. In the premium segment, we have seen quarter 3 taking us in few properties around 80%, in few properties around 70%. So I would say it's a range between 70 and 80. And I think it's been a good quarter, and clearly the consumers are back and they would like to do more planned shopping, and we do think that this is here to stay.
Slipping into a break here, more updates on the other side. Stay tuned.
Hi, welcome back to Buy Now, Sell Now. You're watching ET Now. We've been asking you quiz questions every day, BNSN Quiz Connect. Today's question was, which of the following technology stocks currently trades at the highest price to earnings multiple? Your options were Ramco Systems, Intellect Design, India Mart and Route Mobile. Well, it's a close race between India Mart and Route Mobile, but India Mart takes it at the current valuation, nearly 96 times price to earnings versus Route Mobile at 92 times price to earnings. So we have one person who got it right today, Bharat Sahani. Congratulations to you, sir. Hearty one at that, and we hope you keep participating in our quiz on a daily basis.
All right, So with that, we're out of time on this edition of Buy Now, Sell Now. Markets definitely have recovered back in the green territory, but we'll leave it for the other anchors to take it forward from here on. Thank you so much for joining us today. It's a goodbye from me and Varun.